What is up guys, my name is Ignas, welcome back to the channel. This week we looked into the dividends for Walmart, ticker symbol WMT, and even though the stock has been moving lower, in 1 month it is now down for 22.04%, the current dividend yield is not yet anywhere undervalued. We've looked into what percentage we saw in the last 5 years, and even after the sell-off it is right now a few percent under that. So now I'm thinking if other retail giants could be in a better situation. For the comparison I will pick 2 more names. So one is Costco, ticker symbol COST. In 1 month it is now down even more, minus 24.68%, and currently their dividend yield is at 0.84%. And second is Target, ticker symbol TGT. Performance here is the worst of the three, as in 1 month the stock is down for 39.5%, and it's now trading at a dividend yield of 2.46%. So how exactly will the comparison go? For that let's go into Google Sheets. We are now in the document and the 3 names are in: Walmart, WMT, Costco, COST, and Target, TGT. I've added 5 metrics that we will use for this comparison. These are the dividend yield percentage, dividend payout ratio, years of dividend increases, compound annual dividend growth rate for next year, and then the last one will divide the current dividend yield with its 5-year average. So we will compare each metric between the 3 names and check which one will be on top of those. The winner out of the 3 gets 1 point for the metric, and whichever stock gets the most metrics wins the comparison. I think this was as clear as it gets and will smooth things out along the way. So let's start. So the first metric is the dividend yield. It shows how much the company is paying back to investors with regards to the share price. So Walmart is now paying $2.24 per share, which is a yield of 1.88%. For Costco that is $3.60, 0.86%, and Target has it at $3.60, which is a dividend yield of 2.42%. Now the next metric will be the dividend payout ratio. So how much of company's earnings are distributed back to investors as dividends? Meaning that the lesser the percentage, the more room there still is to increase on those dividends, or otherwise keep reinvesting back into the business. So in Walmart's case, the payout ratio is at 34.8%, for Costco the ratio is 24.93%, and Target has the payout ratio at 26.31%. Now let's take a look into the dividend increases. The number here suggests for how many years the company kept on increasing dividends for at least 1 quarter every year. So we are looking for the longest increase streaks. In Walmart's case, they have been increasing dividends for 49 years straight, Costco has been doing that for 19 years, and Target has been increasing dividends for a quarter every year for 51 years. Now the next metric is the compound annual dividend growth rate. We'll check the next year's estimate and how much the company has been increasing dividends in 5 years. So in Walmart's case, the 5-year growth rate is at 1.49%, 5-year growth rate for Costco is at 10.25%, and the same for Target next year is expected to be at 12.30%. Now for the 5th and last metric, we'll use my dividend investing watchlist. So we want to check how the current dividend yield fares against its 5-year average counterpart. In Walmart's case, the stock is now trading at a yield of 1.83%, and we've calculated that on average in 5 years, the stock was trading at a yield of 1.87%. This suggests that the current dividend yield is now under average for 2.34%. Now let us do Costco. So the stock is trading at a dividend yield of 0.73%, and on average in 5 years, we are looking at a yield of 2.03%. This means that the current yield is now under average for 64.12%. Third one is Target, and this one is now trading at a yield of 2.23%. So with a 5-year average of 2.49, this means that the current yield is now below average for 10.39%. Now if you would be interested in doing a similar analysis on the yields for yourself, you are able to do just that by following the first link at the top of the description. Otherwise, feel free to add the dividend paying names in the comment below, and I'll consider adding them into the watchlist myself. Maybe there are opportunities that I'm still missing here. So we did check through all the metrics, and now let us take a look into the results. With the dividend yield in mind, the first point goes to Target, where the highest percentage is now at 2.42. Then for the payout ratio, a point goes to Costco, with the lowest ratio at 24.93. For the consecutive dividend increases metric, we got Target, where they have been increasing dividends for 51 years straight. Then dividend growth rate also goes to Target, with a 5-year annual growth rate of 12.30%. And lastly, looking into the current dividend yield and its 5-year average, average. The closest to that average is now Walmart, where the yield is under it for just 2.34%. So we can calculate results. Walmart got 1 point, Costco also 1, and with winning on the most metrics, Target gets 3 points. So with 3 best numbers out of the 5, Target could be considered the winner of this comparison. So that was it. Make sure to support the channel and leave a thumbs up under the video. Do you agree with the comparison? Is Target a worthy pick right now? Share your stance or your preference in a comment below. If you would be interested in getting access to my dividend investing watchlist, then consider memberships. By becoming a member, you will get access to Discord, where I share the stock watchlist and all the buys and sells exactly when I do them. This could be a great option to track my moves closely. Last week I did an analysis on another company, so if you would be interested in that, then click on a video that is currently on the screen. And that was it from my side. Thank you for watching, and I will be seeing y'all in the next one.